And we're going to go right now to the White House because President Obama wants to replace bonus season with a bank tax season. So who is going to be hit the hardest? We bring in Hans Nichols. As I say, he's at the White House. Hans, take it away.
Some 50 banks, both foreign and domestic, will learn today that the White House plans to wring $90 billion in them to recover those TARP funds so that taxpayers aren't on the hook. Now, AIG will be subject to the tax. Those auto companies, however, they won't. Fannie Mae and Freddie Mac, Eric, they also have safe harbor. Now, let's look at some of the criteria here. They're going to go after companies that have more than $50 billion in assets. It will apply to firms that didn't receive direct TARP money. That includes bank holding companies and insurance companies. Now, the tax will be 15 basis points of covered liabilities. That's total assets minus Tier 1 capital and FDIC insured deposits. Now, the tax can extend either less or more than 10 years. If it's less than 10 years, if they pay back within the 10 years that $90 billion, the tax will continue and then it will sunset out. But it could go longer, Eric, than 10 years if they don't meet their marks.
Well, yesterday we heard some concerns being raised from the CEOs. We're going to get into that just a little bit more about the tax and how they might pass it on to consumers. Hans, what are you hearing from the White House on that front?
They're saying that won't happen for two reasons. One, the public shame. They can't pay themselves bonuses and then go after their customers. But two, they say competitive advantages because these smaller and community banks won't be charging these fees. They won't have to pass anything through. So if the big banks do assess the fees, they'll lose customers to the smaller and the community banks. And those are the very banks the White House is relying on and wants to rely on to get lending going to revive the economy. Eric?
Thanks, Hans. That's Hans Nichols from the White House.